John, it's good to see you. What do you think is happening here?
Hey, Kelly, thanks for having me. Well, I think what's happening is we've reached a bottom and the stocks are starting to react. They're early cycle. I think there's some interesting points that came out of a recent survey that we did. It's an Evidence Lab Google search monitor. And really, it reinforces the fact that things slowed in July relative to the past 8 Julys, but they improved sequentially through June and July, which is encouraging. And this July pause is very consistent with what the home builders have been saying. And they've been saying they're seeing early signs of stabilization. Now, you couple this with the Fannie Mae Homebuyer Sentiment Index hitting all-time lows relative to the global financial crisis, in fact, and I think you have, the forming of a base.
DHI, OC, why are some of these your favorite picks? And what about those who say housing can't start to outperform until the Fed's tightening ends?
Well, I'll start with D.R. Horton, DHI. This is the largest home builder by volume. They are focused on the right part of the market, which is first-time entry level, the very need-based portion of the market. And they are just a consistent executor. OC, big cash flow generator, very shareholder-friendly in terms of allocating that capital. And I think the growth opportunities, both organically and through acquisition, are pretty strong. Now, can the home builder stocks work before rates change? It's a good question, right? I think it's an early cycle sector, and the worst seems to be priced in. So my answer is yes, I believe they can.
Is the best way to go to pick a portfolio of individual stocks, or to, which we just looked at right there, KB, Lennar, Pulte, D.R. Horton, assemble a portfolio, or just to say, I can't do that, I want to go with an ETF or a fund?
Hey, Tyler, good question. So, look, there's a couple ways to think about it. The group has moved very much in tandem, right? And so I think you could say buying a group is a reasonable thing to do. However, I think that the stocks have been battered so much that there's no reason to be cute. You can go with the biggest and the best, and that's D.R. Horton.
All right.
John, talk to us a little bit about these stocks. We know that the PEs have crashed to 4.5 times forward earnings. We know the news flow is not going to be great in terms of just the level of home sales and that kind of thing in the months to come. But what is the potential upside here that you see? And what's the hurry for those who might just want to wait this out for a while?
Sure, good question. It's all about the second derivative and when we start making some kind of momentum. July, by all measures, is going to be the trough in new home sales. And I think we start seeing a recovery from there. And that is when it's time to get in our view. So I think that, look, if you get in now, will you be a little bit early? Perhaps. But it's better than missing the first 10 to 15% upside.
All right. John, thanks for your time today. We appreciate it.
Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.